Welcome back, everyone. Today, we're diving into a super fascinating explainer covering the financial fundamentals and the valuation of Terreno Realty Corporation, trading under the ticker symbol TRNO. If you appreciate clean data, clear metrics, and direct answers, well, you're in the exact right place. We're going to put TRNO under the microscope, looking at everything from their historical wealth creation to their vital financial science, all to determine just what this real estate engine is actually worth. Okay, let's dive into this. Here's our roadmap for today. 1. The big picture returns. 2. Revenue and profit growth. 3. The dividend story. 4. Margins and financial health. And finally, 5. Valuation and fair price. To set our baseline for today's explainer, as of our most recent data snapshot, Terreno Realty Corporation is trading at exactly $65.27 a share. That's our starting line. Keep that number securely in your head. Because when we run TRNO through a discounted cash flow valuation model based on their free cash flow, the calculated fair value price comes out to a staggering $324.77. This immediately presents us with the core mystery of today's explainer. How is it mathematically possible that a stock trading at roughly $65 has a calculated margin of safety nearly 80% below its fair value? I mean, is the market totally asleep at the wheel, or is there some hidden catch in the data? Well, let's follow the numbers and find out. Section 1. The big picture returns. A track record of long-term wealth. Just look at the sheer consistency of wealth compounding over time here. On a 15-year horizon, we see a massive 489% total return. Over a decade, you're looking at over 265%. And this isn't just ancient history either. Even over the trailing 12 months, TRNO has delivered a very robust 19% return. The past definitively proves this company knows how to build shareholder wealth. But how exactly are they doing it? Section 2. Revenue and profit growth. Under the hood of the growth engine. First up is the top line, revenue. We're looking at the compound annual growth rate, and just look at how beautifully leveled these bars are across distinctly different time frames. Over a 5-year period, revenue has grown at an average of 20.5% a year. Over 3 years, it's basically 20%. And in the trailing 12 months, it actually accelerated to over 24%. This brilliantly illustrates a relentless, steady operational engine that isn't just maintaining its pace, it's actively speeding up. But revenue is only vanity until it becomes profit, right? And here's where the TRNO story really gets explosive. Look at the trailing 12-month growth column. Net income sits at over $401 million, representing a jaw-dropping year-over-year growth of 118%. Earnings per share practically doubled, and most importantly for our valuation later on, free cash flow skyrocketed by over 131% to $138 million. This triple-digit growth across the bottom line is the absolute bedrock of that massive fair value price we teased earlier. Section 3. The dividend story, the real estate income play. TRNO delivers an incredibly powerful narrative of reliability with this one number, 15. That is 15 consecutive yearly dividend increases. Through changing interest rate environments, market cycles, and global events, TRNO has reliably handed a larger paycheck to its investors every single year for a decade and a half. The dividend yield itself sits at a very respectable 3.19%, with a 3-year compound annual growth rate of over 9%. So the dividend isn't just high, it's growing faster than historical inflation. But as we dig into the numbers, I definitely have to point out a major tension point in these metrics. The free cash flow payout ratio is currently sitting at 153%. That means they're currently paying out more in dividends than they are generating in pure free cash flow. Now, while that's sometimes explainable in real estate due to heavy property investments and depreciation, a ratio over 100% is always a metric you absolutely must watch closely. Section 4. Margins and financial health, the doctor's checkup and vital signs. The data presents a really fascinating tale of two extremes. On the strength side, TRNO is an absolute fortress. Their net profit margin is an unbelievable 62.36%. For every single dollar that comes in, over 62 cents drops straight to the bottom line as profit. That is world-class efficiency. Furthermore, their debt-to-equity ratio is just 0.23, meaning they're barely utilizing debt compared to their total equity. But look at the weaknesses. The current ratio and quick ratio are both flashing warning signs at 0.14. To understand why that's a red flag, let's briefly look at the definition of a current ratio. It measures a company's ability to pay off its short-term liabilities with its short-term assets. A ratio of 0.14 means that for every $1 of short-term debt due within the year, TRNO only has 14 cents in liquid short-term assets on hand to actually pay it. This creates a really fascinating tension for us. You have a company with incredibly low overall long-term debt and massive 62% profit margins, but a remarkably tight squeeze on their immediate short-term liquidity.
Section 5. Valuation and Fair Price. Calculating the final price tag.
Looking at the standard valuation multiples, we see a bit of a mixed bag. A price-to-earnings ratio of 16.78 is actually quite reasonable for a growth stock. The price-to-sales ratio of 14.57 is undeniably high, suggesting the market is charging a real premium for their revenue. However, the absolutely crucial point is that last row. The PEG ratio, which measures price-to-earnings relative to growth, is an astonishingly low 0.16. Typically, a PEG under 1.0 is considered undervalued, so a PEG of 0.16 heavily suggests that TRNO's explosive underlying growth is vastly outpacing its current price tag. And this brilliantly illustrates how those specific growth numbers map out when we actually run the models. The current trading price sits at $65.27. If we project their future value based on their historical earnings per share growth, the fair value jumps to $162.03. But if we use that explosive 131% free cash flow growth that we highlighted earlier, the mathematical fair value rockets all the way up to $324.77. Which brings us right back to the incredible number we started this explainer with. Based on the free cash flow model, TRNO is currently trading with a 79.9% margin of safety. According to the strict data, the stock is heavily discounted compared to the cash it's historically capable of generating. But as focused learners, we know better than to just blindly follow one metric. We look at the whole picture. Terreno Realty Corporation offers an amazing 15-year track record, triple-digit profit growth, and an 80% valuation upside, but they also present a heavily strained free cash flow dividend payout ratio and a significant short-term liquidity crunch with that 0.14 current ratio. So I leave you with this final thought to guide your own further research. Is the massive mathematical upside worth the risk of those short-term liquidity bottlenecks? The data's on the table, the metrics are clear, and the next move is yours. Thanks for joining me on this explainer, and keep learning.